Hey guys, John Polemy here, Actionable Intelligence. Today's Saturday, December 14th, 2019. I want to start out with this kind of tongue-in-cheek. We see that Greta Thunberg was the Time Person of the Year, and under her name it says the power of youth. And I just have the headline up here, Climate Brat Greta is Time Person of the Year. So I looked up what the criteria is they use for Time Person of the Year, and it's usually somebody good or bad, they say, that has had the most influence on society or the world that year. And I think the power of the youth, I think I would have been more inclined to say the Hong Kong protesters. I mean, here we have a bunch of youth, young people basically fighting for freedom, battling in the streets. People are being killed, people are being injured, people are being disappeared by the Chinese government, and there's very little coverage of it. I think that's a lot more impressive than this brat skipping school, running around lecturing us. I think it was funny. I watched a video. I don't think it's really maybe what she thinks, but I thought it was funny. There's a clip out there that, and I'll try to find it and put a link to it in the show notes, but something about, she said that we are going to hold politicians accountable and put them up against the wall. I don't know if she was being literal in that sense of put them up against the wall and shoot them if they don't do what we want them to do, but it just kind of, I found it a little bit amusing. So what I want to get to is this is this the Contrarian magazine cover? I think it is. I think people are tired of being lectured to about this climate hysteria. Do I think most people want a clean environment? Yes. Do I think we in the West, even in the U.S., we've done a tremendous amount towards air quality and water quality? Do we have more to go? Yes. But if you look at how things change over time, I can remember when I was a kid going over the Skyway Bridge in Buffalo, and you could see the Buffalo River, the plants like National Aniline, which was a dye manufacturer. You could just see purple dye flowing into Lake Erie. There were times where you couldn't fish or eat fish out of Lake Erie. That's all changed now. Part of it's the deindustrialization of the U.S., but there's been a tremendous amount of new regulations put in place. Our air is probably the cleanest it's ever been. And, I just am not going to have this discussion anymore about CO2, which is a life-giving gas, as being the object of our destruction. It's a manifestation of failed Marxist ideology to parasite itself onto this ideology as a way to gain control and gain power. AOC said that. Many people, Greta's even said that now. It's all about a way to correct oppression and all these other things. It just leaves it wide open. So it's basically just a hijacked movement run by former or current Marxists, Bolsheviks, whatever you want to call them. It's just the same old thing, lie wrapped up in a new package. So I think people are tired of it. People, if you poll them, they say they want clean water and clean air. If you say that, do you want to raise your electricity costs by double, well, then their views change. So that's just how it is. I thought it was notable. I went through and looked at some of the previous people of the year, some good, some bad. You've got Hitler was the person of the year in 1938, Stalin twice. I mean, combined, these people probably murdered 30 or 40 million people or more, if you count the casualties caused by World War II. I mean, FDR was on there twice. You had the Hungarian freedom fighters when the Soviets, when they rebelled and the Soviets invaded. There was a lot of death there. Again, young people fighting for freedom. Lech Walesa in 1981, he was a Polish labor leader that helped bring down communism in Poland. Then, of course, other casts of characters I put in here, like Ben Bernanke, serial bubble blower, extraordinaire, apologist for central banking. So it's a mixed bag. If you go through the Wikipedia page, some good, some bad, some like, how did this happen? Why is this person on there? But I do think that we're kind of reaching peak Greta. People are getting kind of tired of getting lectured to by a 16-year-old kid. That's why, 16-year-olds don't have a lot of wisdom. They don't have a lot of experience. And if we were to go down the path that she's saying, then a lot of people would die. It's just a simple fact. So I think people have had enough of it, the hysteria. It's starting to get rolled back. And you kind of saw that a little bit. I mean, you're seeing this more and more around the world. I mean, the left is on their heels in recent elections. Look what just happened in the UK. I mean, it was the greatest conservative win since Thatcher, I think. You're going back 30 or 40 years. People have had enough of the leftist ideology and being lectured to and being talked down to by leftists. And this, I believe, is going to be part of my 2020 prediction video that I'm going to make in the next couple of weeks. But one of the main predictions I'm making is a Trump slide 2020. I think this is going to be the same result that we saw here. You know, the beginning of this thing was Brexit. The Brexit vote was people didn't believe it. They didn't think it was going to happen. It did. And now you saw even in the UK what they called the red wall of of the Labour Party collapsed. You know, people outside of the big cities, the normal, regular people, not the hipsters, not the progressives that live in the major cities, are tired of this. They're tired of being ignored. They're tired of not being listened to. They're tired of politicians being elected to do things and not doing it. And I think the same thing is going to happen here. No one elected the Democratic Congress to go and waste 3 years, 2 years impeaching President Trump. You know, it's just whether you like Trump or not, he's the president, and you're going to have an election in less than a year. What is the purpose of this? In the meantime, nothing is happening on a legislative front. I mean, Trump is center left. I mean, he's willing to sign an infrastructure bill. They can't get one put together. So this is all about power. We can't give the president a win. We've got to keep him on his heels. And I think it's going to have a negative reaction. That's kind of my prediction for 2020, but I'll get into that in that video. I just wanted to point this out because I thought this was kind of interesting how they selected. I would have selected, like I said, selected the Hong Kong protesters as the person of the year, but that's me. Talked about this before. Another article came out in the FT. Big name investors buying energy stocks. Warren Buffett, Carl Icahn, Jerry Jones, Sam Zell are just a few of the bargain hunting hunters flocking to the energy industry, the worst performing sector of 2019. And we see what Zell says here. We have a history, he's talking about his shop, has a history of investing in arenas where previous capital flows have stopped. The current environment in the oil sector creates opportunities where there is limited competition. Bingo. Were we a little early? Yes. Are we right on this trend? I believe so. I would just point out that West Texas Intermediate crude put a 6 handle on it on the price yesterday. It's $60 a barrel. It's been performing very well this year. Energy stocks aren't doing anything. We are starting to see some movement though in some of the energy stocks in the last week or two, and I think you're going to see that sentiment change and that money flow in 2020. Because I do think that there's a possibility that even if oil prices stay where they are now, I mean, I have a company in the portfolio that's cash flowing over 20% and is paying down massive amounts of debt just at current oil prices. It's a Canadian E&P. So I think energy is going to be the big theme in 2020. I actually think that energy demand keeps going up as economic growth. And next slide, I'm going to show you. We're going to see economic growth around the world next year. Now, look, I'm not saying this is real growth or this isn't manufactured growth. It's nominal growth caused by money printing, but it's going to happen. So that's just how it is. Everybody keeps talking about a worldwide recession. That's past news, guys. We're past that. So this is the page 14 story that's going to be coming to page 1. You know, I've pointed similar charts out in the past, but here we have a chart where we see the solid blue line is global PMIs. You look over here, here's 50, below 50 is contraction, above 50 is expansion. You've seen over the last year and a half, the world PMIs have been going down. Why? Yes, we've been in a recession, no doubt, because for various reasons. And now what we see is that you see the dotted line is global PMIs. You see where they're at. They're down at 2012 levels. They're massively down. So what have we seen? We've seen massive amounts of, excuse me, let me turn that around. This is global central bank net number of central banks where last move was a rate cut. Sorry. So what you're seeing is this is zero here. So you actually had tightening all of the last year and a half. That's why you saw PMIs going down, and now you've turned that around late this year. In the last 6 months of the year, like I've pointed out many times, central bank easing around the world. You see how it's going up, and you see the correlation. Is it exact? No, but there's a definite correlation between central banks easing and global PMIs. So when banks are tightening, we see economic contraction, PMIs go down. When we see central banks easing en masse, we see PMIs climbing, what has a knock-on effect for energy demand and commodity demand. And I think that that will be the case next year, as I've pointed out. Now, I think the first quarter of the year, the first half of the year, there are several projects coming online, some projects in Guyana and in Norway that are going to spike global supply by about 600,000 barrels a day. But after that initial surge, we'll see how the market gets to equilibrium. We continue to see contraction in the shale plays in the United States. I think that is a bubble that has burst. I don't know where the floor is on that, but we're not seeing new money going to that. We're not seeing new bond issuances. We're not seeing equity issuances. We're seeing companies pulling back, living inside their cash flows. And if they're doing that, because it's a red queen's race, if you get production up to a certain level, you have to run faster and faster just to maintain that production because of the decline rates. We've said that before. So it's going to be a little bit, there's a lot of plates in the air. We don't know exactly where everything's going to end up right now, but I think that it's conceivable that over the next year at least, we're going to have a good energy market, just based on the money printing that's going on and the recovery in world economies. I mean, it's just, if you print enough money, you can create economic growth. We've said that before. So having said that, one of the things I want to talk about here is another article that I saw this week, which I think is kind of a macro thing we need to pay attention to. It's the Fed to let inflation run above target. The Federal Reserve has an inflation target of 2%. For some reason, they think that price increases over time are a good thing. I'm not going to get into why the government and why the powers that be need positive inflation rate. It has to do with taxes and debt and stuff like that, but and revenue generation. But it's not good. Inflation and price increases are not good for the average working person that has a paycheck. The inclination in a totally free market economy would be towards slight disinflation. Prices, because of increased competition, better products, quality, you would see a slight reduction in prices over time. And the wage earner, his dollars, his savings, his wages would go up in value over time. And what you have instead, because you have these Marxist central planners, that's what this is. It's central planning par excellence, who control the money supply, who control interest rates, or try to. They say that they want to have a 2% inflation rate every year. Well, over a generation or of your working life of 25 or 30 years, that's anywhere from 50 to 60% devaluation in the currency. You're not telling me that if you're just a wage earner, if you're not an investor or speculator, that's fine. You know how you can take advantage of that and you can outrun that currency devaluation. But the average person that's just a wage earner, they don't even have any conception of what's going on. They're the frog that's slowly being boiled. And so now you have the Federal Reserve, because of the debts we have, because of the economic situation we're in, because of where we're at in the debt cycle and where we are in our history here and what we are looking forward to vis-a-vis entitlement spending to Social Security and Medicare, pension liabilities and all the rest of it, promises that were made that can't be kept. They're coming out with a new policy that they're thinking about letting a rule that would let inflation run above its 2% target, a potentially significant shift in interest rate policy. I would say that's true. The danger here, folks, is very simple. They haven't been able to maintain the 2% inflation. They've had fallen below that, so now they want to do what's called catch up. And so what does that mean? Print more money and allow inflation to run? Because you're going to get some inflation this year as commodity prices begin to turn around. And so we're going to let inflation run at what, 5%? See, the problem is if you let the inflation genie out of the bottle, if expectations for inflation and price increases, these are psychological things that get implanted into the marketplace also. And if you get an inflation mindset, that can change the whole scheme around investing, around money flows, around expectations, behaviors. And that's what we had in the late 70s and early 80s. That's why Volcker, I think it's apropos, I mean, he died this week. He was the famous central banker that came in and raised interest rates to like 16 or 18% in order to kill inflation. That inflation rate was only like 7%. And that was a big deal back in the late 70s, early 80s. When I was a kid, I remember that. And he was chastised and he held firm and he broke the back of inflation, but we had severe recessions because of that, back-to-back recessions, as a matter of fact, I believe in the late 70s and like into 1980. This is why Jimmy Carter was only a one-term president. So I think that, you know, central planning doesn't work. I've said this before. A bunch of masters of the universe sitting around a table with all their PhDs thinking they can push the buttons and move the levers in the right sequence and get the outcome they want. I mean, it's hysterically absurd. We don't have a free market. We don't live in a capitalist society. That went away many decades ago when we went off the gold standard. And I know that's not popular. People don't understand that. But you can see the inflation. You can see the devaluation in the currency since we went off the gold standard. And you talk about income inequality. The Federal Reserve has a lot of culpability into income inequality, and no one talks about it. No one has a clue. The reason why the rich get richer is because the newly created money goes to them first. They have access to that money and can get it and invest in things that will take advantage of the increase in money. That's why, the guy who's schlepping a warehouse forklift job doesn't have a clue how any of this works, and by the time he gets home, he doesn't have the ability to understand these things. He doesn't have the education. He doesn't have the experience. That doesn't mean he's not capable, but he just doesn't. And so he says, well, yeah, these billionaires, well, how did they become billionaires? Because they had access to all this money and going into these bubbles. They had first access to the created money. So it creates, more and more inflation, more and more wealth inequality, and the rich getting richer. But there's not even a discussion about this. It's like, we have to have socialist policies to solve this. Well, how about we get rid of the Federal Reserve? How about we quit trying to manipulate and pull the levers and push the buttons in the right sequence? But this isn't going to change. It's just the way it is. It's not, I can wish all I want. It's just not going to happen. So I think this is going to be good for us, though, because if we get into a mindset at the Federal Reserve where we have to do catch-up now because we've had these many years, if you will, of under-target inflation, we're now going to go and over-target for inflation. How they get there, I don't know. How they're going to do that, I'm not sure. But if that's their policy, or if we do get inflation start to run, I mean, we're talking about having this policy, folks, when we already have supposedly an unemployment rate that's at like 50-year lows and we have bottlenecks in the economy. I'm seeing it in my own business. I mean, when you get down to these lower unemployment rates, the people that are available to hire are not qualified. Let's just put it that way, okay? And you're still having to pay these people, still trying to get projects done. So what I'm saying to you is that if we're going to let inflation run, we get 4 or 5% inflation. I mean, this is going to be very good for energy. It's going to be very good for commodities. That's my perception. And like I said, economic expansions just don't die on their own. They can theoretically run forever. They have to be killed some way. And if the Federal Reserve is going to let inflation run and is not going to raise rates, then the only thing that I can see killing off an expansion that's created by created money will be an exorbitant increase in energy prices, which is what we saw in 2008 also. That was one of the catalysts that killed that economy and put us into that pseudo-depression, if you will. I mean, at one point, oil prices were up near $140 a barrel. So that's where I think we're heading back to. It's not going to happen in the next year or so, but if that's their policy, and they have to do this, folks, because what's the choice? We have a huge amount of liabilities coming due over the next 20 years. We have an untenable amount of national debt already. We have deficits of $1 trillion a year. They have to have inflation to try to devalue the currency so they can pay this debt back with cheaper dollars. That's really, what's going on here, I think, long term. So to be, you're warned, you're forewarned, and so I think we see how this develops. I don't think this is the policy yet, but this is where they're moving towards, and this is going to set us up later on, I think, in the next several years for MMT and the physical stimulus and all that's going to go along with that, just spending money because we can just borrow money at 0% or 1% interest rates. So I think this is going to be highly positive for commodities. It's kind of like all coming together, right? I mean, we're at this historic low for commodities versus other asset classes. Now they're going to create this money, huge amount of inflation, and it's just setting up, I think, perfectly for the next 3 to 5 years for where we're at. And we're already, I think, starting to see the beginnings of that. So that's it for this week, guys. Like I said, I will be putting out a 2020 prediction. Some of them will be provocative. Some of them will be, I think, fairly easy to make. But look forward to that. I'll also be doing another video here in the next few days. Was requested by several viewers about my investment, how I go about selecting investments, how I do my research, how I come to a conclusion on what speculations or investments I'm going to get involved with. So be looking forward to that. Again, want to point out the services that we provide. Actionable Intelligence Alert newsletter once a month. You get the newsletter with access to all back issues. We have picks in there. We talk about, we do our updates, and we talk about the things that we talk about in these videos get translated to actual investment themes that you can take advantage of. That's $79 a year, and we have a link for that. Will be in the show notes. So that's it for this week, guys. Appreciate you listening. Appreciate you showing up. Continued support is appreciated, and we'll be talking to you next week. Thanks, guys.